welcome to KYC, Know Your Counterparty, hosted by PM Insights. I'm Nick Fusco, founder and CEO of PM Insights, formerly HQ Inc., and today we have Joseph Gillette on the line. So Joseph, I wanted to introduce you, get our audience to know a bit about what you do. So why don't you tell us what firm you're working with and representing and what you're working on?
My name is Joseph Gillette Sr., and I work for Venture Capital Cross is my brand name, and the broker-dealer is RF Lafferty & Co., which is an old, well-established investment bank type of broker-dealer in New York.
Excellent. And I mean, we want the backstory. We always want to understand who we're working with. We want to know our counterparties, right? So we'd love to hear a little bit about how you found yourself in private markets. And
since I was 5 years old, I've been interested in markets, and my dad taught me day trading, so I was a day trader in the 90s, and it was an issue when I was 17 because you had to be 18, and so I was really early in markets, and day trading was a really bad learning experience because it was the 90s, so it was the dot-com boom, so we would literally throw darts at the board and make money, and so around 2000 I got into currency trading, and I did that for 20 years. And quickly found out trading is impossible, so I developed algorithms. I have a computer background. I've always been a technology person. I love technology and computers, so I developed algorithms, and that worked great. I did that for 20 years, and then the Dodd-Frank regulations basically ended the U.S. currency business for everyone except for the 8 banks. And I was going to raise money to found my own bank, and my close friend, who's a securities attorney, he mentioned about private market unicorns, and I started to research buying SpaceX shares originally, and the process was so convoluted, and we just wanted to buy the stock. We realized that there's a business opportunity here, and I didn't know about this whole secondaries world, and it's really a great market, and I love venture capital because you're creating value. These companies are actually making meaningful businesses in the economy, whereas a trader is just sort of, they say they're creating liquidity, but venture capital has a good feel. You create jobs. These companies are solving real problems, so it's a good space.
Right, and I love that. And I love the backstory. I didn't know that about you. 5, getting interest is pretty wild, but I remember being 12 when I first made my investments, and then eventually I think I had a similar ideology coming down from the top, from my old man, having me trade options when I was 16. So it catches you early, and you never know kind of where it's going to go, right?
Yeah, the family business was restaurants. My father founded Numero Pizza in 1969 in Los Angeles, and anybody from LA probably knows Numero. And every year my dad would call me and offer me a job to run the business, and I would decline it. But he was a finance guy. He was always trading stocks, and the funny story when I was 5 is I had a lemonade stand, and one of my mom's friends asked to borrow $5, and she said, "Oh, I'll pay you back," and I told her with interest. Nice. And everyone was laughing, and but I always was interested in markets and really business more than in markets. I mean, the business is behind it. My dad was an entrepreneur, so I got that from him, and always was a serial entrepreneur.
Yeah, that's brilliant. So bringing up markets. We know that we operate in the unicorn end of the market. That's brilliant. Do you operate a little bit more beyond that, or do you focus purely on your SpaceX's, Databricks's of the world? So what areas of the market do you really work mostly with?
Well, I focus on the unicorns primarily because I'm the worst salesman in the world, and all my demand is unsolicited. Great. So people come to me and say, "I need shares of SpaceX or Anduril or whatever, Anthropic, OpenAI," and we match buyers and sellers. But we found that there's also an interesting business in earlier stage VC, which we discovered because most of our counterparties are these same VC firms that fund early stage deals. They invest in something and then wait 10 years and then sell it. And so we also work with earlier stage companies that that's also the better return profile. If you invest in a unicorn 6 months before an IPO, the chances of making a decent return are the VCs are really who have the outsized returns, and they take outsized risks to get those returns, but that's also an interesting part of this market.
Great. So understanding you work with the VCs, I mean, are there other client types that are in your purview? So if someone were to reach out with you with interest in buying or selling, what are the different client types that you've worked with?
We don't say no to anyone, so it's basically across the board. But we've found that there's kind of two market segments. It's the retail market and the institutional market. If you want to call it, there's a GP business and an LP business. So we have a fund, DT Unicorn Fund, where we'll actually act as the principal in the transaction. But we usually do it to facilitate a means to an end. So our focus is the institutional market. But these institutions, even the VC firms, are comprised of individual investors, so we work with them as well.
Right. And then just from the perspective of PM Insights, we traditionally have looked at the institutional market. So average sizes could be in the many millions, but there certainly is a burgeoning retail market if someone wanted to do a $20,000 or $50,000 trade. Sometimes those are a little bit off in our perspective, but it's very interesting to see who's wanting to get involved from our perspective. And I'm just curious on the institutional side of the market, what opportunities do you feel are heating up? Do you feel it's a macro thing where the ideology is to go a little bit earlier stage, or is it, hey, I have this one specific deal I'm working on and it's going gangbusters? Is it a sector? Is it a stock? Would love to hear what you see as heating up.
Well, I think AI is decelerating. That it was a lot of money pumped into AI that it's, I don't want to say inflated or overvalued, but there's just a lot of money and they haven't really produced a lot. So a lot of institutional capital is looking for AI alternatives because since the market crash in 2022 or whenever you call it, pretty much 90% or so of new capital has went into AI or AI derivatives. And everything else has been, with a couple exceptions like SpaceX and a few anomalies. And so I think a lot of that capital is looking for other places to invest. So I think fintech is coming back a little bit, and also some kind of non-software sectors like ag tech and just biotech. There's just a lot of niche offerings that are starting to make other sectors that have been kind of slow. But I think generally the problem's been just a combination of White House policy, Fed policy, creating inflation, and markets have been depressed. And now that we're going to have a change to the White House, we're going to have the Fed cutting rates, we're going to have 2-3 years at least of bull markets. I think it'll benefit all sectors. So I see kind of just a broadening heating up. It's not so much in a particular sector, but I think the big story with AI and technology is that they're shifting away out of AI into something more into technology, but not so much the pure open AI or the just straight AI plays.
Right. Yeah, it's very interesting that you're bringing that up as a broker, because on the data side, when we're ingesting the information from yourselves and from many other counterparties like you, we are seeing a greater or broader dispersion of interest, right? So a few months ago, it was like OpenAI, Anthropic, SpaceX, and everybody was really crowded for demand on both sides of the market into a few key names, and that's now like settled out, so that bell curve is reshaping downward more widely. So it's great that you're kind of suggesting that the same is being seen from you individually. So that's brilliant. So I guess we also want to hit on what's hot in the news. So we had the Fed cut rates by 50 basis points. That's pretty wild. You're talking White House policy, change at the White House. Is there anything else big that you think is really going to reshape the way the market is observed? Because I see a lot of this pressure is probably good for the market, but would love to know your thoughts if you wanted to pick out one or two notes on what's to come.
Well, those are the two big highlights, because as you well are aware, markets are manipulated because we have a central bank system where the Fed decides how much money is worth. And they do that with interest rate policy and monetary policy. So everyone watches interest rates, but not many people watch M3. So you can actually go to the Fed and they say how much money is out there, and they can destroy money or create money. They've never destroyed money. but they could theoretically. So the Fed cutting rates, and also there's other things the Fed can do. The reserve requirement is zero, so it's a lot of little things that the Fed is doing that are going to boost markets. The other things, I think we're going to see a lot of deregulation that's been choking markets in general, but that's nothing compared to interest rates. And the White House policy I'm referring to is inflation is created in other ways. For example, when we put the sanctions on Russia, we sanctioned the largest commodity country in the world, and you could argue the largest oil exporter. So what happened, that started, well, a few things happened, but primarily it drove prices up, because if you buy a tomato in Walmart, it's on average travels 1,500 miles by truck, which burn oil. So all of these things, basically you have two blocks of currencies. You have the commodity-backed currencies and the US dollar fiat currencies, and they just went in separate directions. And that's driving inflation, in addition to high interest rates and other policies and COVID. But I think the story of COVID wasn't the pandemic. It was that the Fed created $18 trillion during COVID, and that it was good for markets. It drove up the prices of real estate, of stocks, but the effect also is inflation, and that's bad for. It's a mixed effect, but overall it's toxic. And so I think we're going to see a reverse of that, and that's a huge story, because it's been choking small businesses. Just lots of parts of the economy have been kind of stuck. And that's why you're seeing anomalies are SpaceX and AI, because they don't participate in the real economy.
Absolutely.
So I don't know if you've seen recently, there's lots of bankruptcies, restaurants, just kind of real economy businesses are shutting down. And the story is the same one for everyone. It's inflation. If you run a restaurant or any business with small margins, you can't pass that on to consumers. You can make the potato chips in the bag smaller each year, but at some point, if inflation is like, let's say it's realistically 20-30% a year, you're going to be squeezed to so a reversal of that is going to be very positive. So I think we'll see good numbers just across the whole job growth. It'll be good for the consumer. It'll be good for the upper class, because businesses will grow. And so I think it'll be a good, at least a few years of golden years. And then we'll see what happens after that. But it's very positive.
That's brilliant. So definitely would have wanted to ask, market direction. You're all for it. The market's up. Whether it's 2 years plus or minus, that's brilliant to see. I'll also ask, given your background in FX, how do you feel about American opportunities? So U.S.-based companies for the private markets versus some of the more international players like Sneak, ByteDance, etc. Not just with the currency play, but investing locally or internationally. How do you feel those will fare side by side?
Well, the U.S. has always been the leader by far, and with a couple exceptions, being objective, I still think the U.S. is the place to be.
Right.
And there's just no comparison, because in some ways, I was reading about Germany, for example. They have all these new rules and laws, and companies are leaving and they're going to Dubai, and we have that too. We have offshoring, we have regulation that, like, companies are leaving California for Texas and other states. But if you compare the United States to almost any other country, with exceptions of small countries, but the difference between, for example, Switzerland and the United States, Switzerland is like the size of Tennessee, or even smaller. So it's easy to run a state like that, but you couldn't run the United States like Switzerland. Like, they don't have a president, they have a council of 12 people. And in the U.S., you just couldn't do that. So I think that the U.S. is still going to remain number one for a long time. I'm very skeptical about this China threat. I think that's a conspiracy theory. I think China poses no threat to the United States. It's a communist country. If you had billions of dollars, would you invest in China? I have a friend in China that was, his neighbor was 5 months in prison for using Facebook. They have the internet police. So I don't think China is like like they always say, oh, China's going to sell our debt and take over the United States. I think we don't really have a competitor. Europe is totally regulated, with a couple exceptions. Europe is just kind of, there's not really any competitor. So I think the U.S. is going to be the place to be. It's always been an innovator, Silicon Valley.
Right.
And so I think that'll accelerate. I think with deregulation, it'll be even more. We'll bring back some of that offshoring that's been going on since the 70s. I think that'll come back to the U.S.
And in conjunction with AI, potentially, to make it easy to onshore.
Right, like even in Tennessee, we have a huge EV sector that's growing. We have factories in EV coming here. And in many states, they've got these data centers all over, and they're in very unusual places like Kansas, and there's huge onshoring happening, and that'll continue to grow because those are resources and assets that will be used. So I'm bullish for the U.S., and that's why we need America First policies to grow the economy here. We need to take care of ourselves before other places, and I think a lot of people are starting to get that. So I think that's a good thing.
Right, and honestly, harking back to what you said at the beginning or prior segment of this show was, we need to make it easier to facilitate trades and interest in these pre-IPO companies. Anything that's traded on the private stock market, it's good for our economy, it's good for our workforce, and it's good for all of us. So you could, what I'm saying is, you could feel good about making a lot of these investments, but we definitely want to know our counterparty. So this is Joseph, and also understand a better kind of notion of the business model, the stock, the company, the ethos, and all of that. So I guess I will end it is, Joseph, what's the best way to get in touch with you if someone wants to reach out and begin kind of some due diligence?
Just go to our website. It's vccross.com, and I'll give the generic email so that it's simple. It's invest@vccross.com, and then we can connect by Zoom or phone or whatever modality suits you. And we're pretty available 24/7, and we're always meeting lots of new interesting people, so we look forward to meeting different people and what they're working on.
Great stuff. All right, well, there we have it. Thank you, everyone, and for welcome to KYC. I hope everyone pulled a few good nuggets out of here and has some good thoughts. Thank you so much, Joseph, and talk to you soon.
Thank you, Nick.